Hello and welcome to Startup Street. I'm Shruti Mishra, and with me, as always, is Arundhati Ramanan. These are the top headlines from the startup space. Gaming companies reach out to the government on complying with the new bill passed by Parliament. Companies seek more time to refund users and plead against immediate ban on financial transactions. Also seek clarity on existing games and providing subscription services.
Japan International Cooperation Agency commits $40 million to Aavishkaar Capital's Global Supply Chain Support Fund. The fund will back small and medium enterprises across Asia and Africa, strengthening supply chains and driving inclusive, sustainable growth.
Walmart reports a 10% rise in international sales led by China, Mexico and India, says Flipkart and Myntra are key to its quick commerce growth strategy and the company is well positioned to take advantage. Walmart's e-commerce sales rise 25% worldwide.
OpenAI is setting up shop in India. The AI company will open its first office in New Delhi later this year as India becomes ChatGPT's second largest user base after the US. The corporate office is aimed at working more closely with the Indian government, developers and other stakeholders under its India AI mission.
Facebook's parent Meta agrees to spend more than $10 billion for Google Cloud Services. This is a big contract for Google as it chases larger rivals Amazon and Microsoft in the cloud business.
Those were the headlines that we're tracking for you this evening, but straight to the big story that we're tracking for you, and that's a CNBC-TV18 exclusive. Gaming companies have reached out to the government on complying with the new bill passed by Parliament. We learned from sources that companies have pleaded against an immediate ban on transactions and sought more time to refund users. Ashmit Kumar joins us now with the details. Ashmit, gaming companies knocking on the government's doors, what do they want?
Well, it's just less than 24 hours after the Rajya Sabha, the Parliament as a whole, had passed the online gaming bill. And with this bill likely to soon turn into an act, there is a beeline that industry officials are making towards the government, towards the ministry, to get more clarity on the implementation, on the compliance of this bill. One of the key issues that they're likely to raise before the government is that if there is an immediate ban on financial transactions concerning any of these platforms, while that may bar users from putting in fresh money, that also bars the companies from refunding the money that the users had deposited with the platform. So that is something that they're likely to see clarity on, perhaps a staggered implementation schedule. Number two, in-app purchases. There are social gaming applications which provide users the facility of availing of some tools on payment of a certain amount of money. These are called in-app purchases. Are they permissible under this new legislation? That's the second key clarity. The third is real money gaming companies, if they were to continue the same suite of games that they currently have without the money component, if the money deposit is removed, will those games be allowed to survive under this current regime? That's another key clarity that has been sought. And finally, if these non-money games are provided to users in the form of a service and a subscription fee is charged, is that something that is permitted under the current legislation? These are a whole host of queries on which the industry is looking for answers and is now, as we speak, making a beeline for the government for seeking greater clarity.
Thank you, Ashmit, for those details. Appreciate you joining us. Big news in the world of impact investing. Japan International Cooperation Agency, or JICA, has announced a $40 million investment into Aavishkaar Capital's Global Supply Chain Support Fund. The fund is designed to back small and medium enterprises across Asia and Africa with a focus on agriculture, food processing and manufacturing. To discuss what this investment means for Aavishkar's strategy and for impact entrepreneurship in emerging markets, I'm joined by Vineet Rai, the founder of Aavishkaar Group and managing partner at Aavishkaar Capital. Vineet, welcome back to Startup Street. First, tell us, what does JICA's $40 million investment mean for Aavishkaar Capital and the Global Supply Chain Support Fund? You call this a new chapter in the India-Japan partnership. How do you see this collaboration strengthening economic and impact ties across Asia and Africa? And with JICA now on board, does this change the scale or scope of your fund's ambitions across emerging markets?
Having me here on the show. Well, this is a good news for us, but the bigger context, and which it is in the context which I spoke about, why we think it's a new chapter, because this investment is part of Indo-Japan partnership for economic growth in Africa, and so this is actually a completely new thought process. where Japan is partnering with Indian Ocean countries to make a significant difference in the economic growth of Africa. And this also is a first time where Japan is investing in an Indian fund, which will then be investing in Africa to support economic growth as well as bring about significant change. So in that context, I said it's actually a new chapter where two countries are coming together to support a strong continent. For the fund, it is good news. We want this fund to reach $220 million, and this $40 million infusion actually helps us cross the $100 million mark. So hopefully, we are looking to actually scale this up to 220 million soon. And
all right. Sure, Vineet. At the heart of your work is the idea of bridging the opportunity gap for the emerging 3 billion. How will this particular fund translate into livelihoods, climate action, and social impact in underserved geographies that we're talking about? And what is the ticket size of the investments going to be?
So small and medium enterprises actually are the largest engine of growth, both for job creation, for women empowerment, for women job creation, for actually trying to solve for climate impact as well. And therefore, whatever we are trying to do through this fund is going to make a significant difference on all the critical areas of impact that we look at. Whether it is finance, whether it is actually empowerment, whether it is job creation, whether it is gender empowerment. And it is in this context that we believe this fund is going to play a very important role. I think the important part of small and medium enterprises, they are not really venture worthy. That means you can't actually put equity investments in them. And therefore, we structured this fund so that we can provide capital in a form that is designed for the cash flows, using the cash flows of the companies. And we can actually allow the companies to scale themselves up to meet the global demand that they are facing. And given the current scenarios of significant geopolitical uncertainty, these kinds of partnerships will make a big difference, not only just to places like Aavishkaar, but to SMEs that are operating in Southeast Asia, India, and Africa.
Okay. Vineet, the Global Supply Chain Support Fund has already made 8 investments. Walk us through the sectors or the kinds of businesses you're backing and what makes them stand out. Also, how many more investments do you plan to make by the end of this year?
So if you actually look at the kind of investments we have made, we have looked at agriculture, and we are generally focusing on export-oriented companies. So giving you some examples of companies that we have supported in India, INI Farms exports, AgroStar and INI Farm exports fresh fruit and vegetable to various parts of the world. Aavishkaar has supported that. We have actually supported companies like Posh and Jumps, which are essentially auto ancillary products for electric EV vehicles to continents like Europe and Japan, and high quality steel, auto grade steel, to again exports that are taking place. So this is actually supporting manufacturing on the ground. If you go to Kenya and you look at, Kenya is the world's 3rd largest producer of macadamia nuts. We are actually supporting the exports of companies that are exporting those nuts to Europe. So the design of the product that we have is to allow export-oriented companies, and therefore we can actually capture a dollar-based return. This is a dollar-denominated fund.
Okay.
We wanted to actually remove the risk.
All right. One final question, Vineet, if you could quickly answer that. With $550 million assets under management at Aavishkaar Capital and $1.3 billion across the group, what's your vision for Aavishkaar Capital 5 years from now, and how central is this fund to that journey?
So I think this fund is important because Aavishkaar Capital is largely known for its equity investments at early stage in the impact space. This fund is our first credit fund, and our ability to scale this fund would make a significant difference to the desire of the group, which essentially is eyeing towards a $3.5 to $4 billion of assets by 2030 and roughly around $7 to $8 billion by 2035. So building the credit side of the business is actually a critical component to the scale that we are envisioning for the group.
All right.
And some of it will be seen by 2030 and the rest by 2035.
All right, on those milestones, let me quickly wrap up this conversation. Many thanks, Vineet, for joining us on Startup Street today, and wish you the very best for all your growth plans.
Thank you so much.
And moving on the hot seat today, Zype, a credit-led fintech for salaried individuals, has raised 90 crore rupees in Series B funding led by Japan's Unleashed Capital Partners with fresh backing from Exponential Capital. The Mumbai-based company, which prides itself on profitability and disciplined lending, plans to use the funds to broaden its product suite and double down on India's fast-rising Tier 2 and Tier 3 markets. In just 2 years of operation, Zype has built a registered base of over 8 million users, disbursed loans to 3 lakh customers and reached an annual lending run rate of over 1,200 crore rupees, all while staying profitable. Joining me now to discuss the firm's fund allocation plan and its growth blueprint is Yogi Sadana, the founder of Zype. Yogi, thank you so much for taking time out and being here with us on Startup Street. You know, you are an AI-driven, need-based credit solutions provider for salaried individuals, right? If you could sort of take me through what you have on offer.
Thanks for having me into the show. Good evening to all of your viewers. What we offer is a personal loan product for salaried individuals. These are people who are looking for short-term loans because of a need that they have in their real life. We provide these loans at a very affordable financing, depending on the risk that we assess on this customer. So these loans could be from as low as 6 months and can go up to 18 months, depending on the need and the risk assessment that we have on this customer. The biggest advantage that we provide is that without the customer having to provide us a lot of information, we are able to, on a 24/7 basis, approve the customer and disburse money into his bank account in under 10 minutes of time from the time the customer downloads the application and gives us very basic information. So these are short-term, low-ticket loans to salaried individuals that we provide.
Sure. And, you know, how does this 90 crore rupee funding that you've raised mean for Zype's growth plans, especially since, you know, you're trying to double down on the Tier 2 and Tier 3 markets in India? So how do you plan to spend these funds?
So these funds would go into majority of our asset growth. So since we are a profitable company, we are not looking at burning more capital, or we are looking at subsidizing for our growth. This is just for AUM expansion in Tier 2, Tier 3 cities. We believe that that's where most of our customers lies. That's where most of the credit expansion has happened due to employment opportunities in Tier 2, Tier 3. And I think that's where the real Bharat is, which is looking out for this affordable credit for themselves.
Sure. And, you know, what about the new product lines of financial solutions? Is Zype planning to launch with this fresh capital?
Right. So we are looking at embedded financing in a big way to make sure that we are able to finance the loan or finance the need of the customer at where they are present. And we are looking at areas of a real need of the customer, starting from segments like insurance financing to medical financing to EV financing. We believe that these are the sunrise industries in India, and people in Tier 2, Tier 3 cities are looking for growth, and that's where we want to support them for their day-to-day needs.
All right. And you've claimed to have clocked an annual disbursement run rate of 1,200 crore rupees. And you recently also closed FY25 with 367 crore rupees in revenue, achieving operating EBITDA break-even within just 2 years of operations, right? If you could take us through where you plan to end this year, and will you still stay profitable? As you mentioned, you don't want to burn any cash while you're, you know, sort of growing. And what about your disbursal target?
So we are very risk and compliance focused as a company. We want to make sure that we grow with very calculated risk, because a lending business is all about managing risk and making sure that you are compliant as per regulatory guidelines. So I think that has been a major factor for us as a company, as a driving force of the company. So we don't want to grow at all costs by burning either risk capital or by burning CAC. So we want to make sure that we remain profitable. We expect to end this year with a target AUM of about 525 crores to 550 crores, remaining profitable, making sure that we are absolutely bang on our risk estimates. And I think that's what makes us very proud as far as our Zype journey is concerned, that despite of the fact that we are very compliant, despite of the fact that we are very focused on risk, that has helped us to make sure that we are achieving profitability on record time.
All right. And, you know, with 8 million registered users and 3 lakh customers already, how does, you know, Zype plan to sort of deepen engagement and scale responsibly?
Right. So we have been recently awarded as a TPAP from NPCI. So we'll be looking at launching UPI services very soon. And I think that there's a big announcement that we'll make over the next few weeks as we get final approvals from NPCI. So to draw the engagement, we believe that payment and credit is a very big engagement factor. So we could be one of the very few companies in India which could enable payments on one side and the lending on the other. So we believe that a combination of these two products put together can create a very, very good engagement for our customer base as well.
Sure. And how does Zype sort of differentiate itself from other credit-led fintechs, right? And there are quite a few players in the game.
Absolutely.
So how do you stay ahead of competition, and what's the long-term vision for the platform?
As you rightly said, we are financial services is not about too much of innovation. It's all about how well you execute. So I think as a team, as a team between myself and my manager, we are very focused on execution. We want to make sure that we provide a very reasonable, at a very reasonable rate of interest, we are able to fulfill our customers' needs. We want to make sure that we are very AI and tech heavy so that we can continue to provide these services at a good rate of interest. And we want to make sure that we remain very compliant with regulatory requirements. So I think a combination of that makes sure that we run the business in a way which is highly profitable and highly regulated. And we want to make sure that the customer is at the heart of our business. We want to make sure that we lend money very responsibly to this customer.
All right, Yogi, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on this journey going forward.
Thank you so much, and thanks for having me. Bye-bye.
With that, it's time for us to head into a short break. Coming up on the other side, e-commerce player Flipkart and hospitality major Marriott International have announced a partnership that allows members of their respective loyalty programs to link accounts and earn rewards across hospitality and retail. Details when we return.
Welcome back. You're still with us on Startup Street. In a one-of-a-kind partnership between an e-commerce player and hospitality major, Marriott International and Flipkart have announced a partnership that allows members of their respective loyalty programs to link accounts and earn rewards across hospitality and retail. So essentially, consumers can shop on Flipkart and potentially earn room nights at Marriott. Shilpa Ranipeta spoke to John Toomey, the Chief Commercial Officer of Asia Pacific, excluding China, at Marriott International, and Manjari Singhal, the head of Flipkart Travel, to understand this partnership better. Take a look.
A shopper of Flipkart already holds Supercoin balance in their account. If they link the accounts between Marriott Bonvoy and Flipkart, they can trade their currency between Supercoin and Marriott Bonvoy. And the other way is that every time you shop on Flipkart, you have the opportunity to earn both now. Supercoin points and Marriott Bonvoy points, which later you can either interchange or use it individually.
Why this kind of a partnership, John? I mean, we've not really seen something like this before. What made you think of teaming up with an e-commerce player?
Well, it's not hard to want to tee up a partner with a large e-commerce player here in India. But what it does is I think for both programs, and I can say certainly for Marriott Bonvoy, it increases the stickiness of the program. It makes the program a heck of a lot more valuable. Today, consumers can can earn points only through staying in our hotels or dining in our restaurants. Now they have the opportunity to go onto Flipkart and shop and earn Marriott Bonvoy points and Flipkart Super Coins doing so. So the program becomes that much more sticky and that much more desirable.
And how does that work for Flipkart as well?
Similarly, right? Like if you look at it, if you partner in the similar space, your space to operate gets limited, right? The white space, honestly, is when two very diverse set of organizations come together to provide the benefit to the users. Nobody would have imagined, and that's precisely why we bought this partnership together, that shopping on Flipkart could earn you room nights in Marriott, right? So I think that is the beauty of this partnership.
At this given point in time, John, what is, how big or how relevant strategically is the Indian market for you? How are you looking at, sort of growing in this current market?
Great question. This is incredibly important for us today. Today we have almost 160 hotels in 40 cities. By the end of next year, we'll be in 80 cities with another 100 hotels. So the partnership with Flipkart enables us to reach into secondary and tertiary cities and make that program, this partnership even more relevant. Right. The second part of that question is India is important for India, but the Indian traveler is also going outside the country as well. So India is a big bet, and I like to say it's a safe bet as well, because this is the place to be. We have a deep pipeline of hotels that are under development right now and ready to keep open up. We also have a development team that's looking to sign more deals as well. Right. So yeah, this is the place to be.
How important is travel as a vertical for Flipkart right now? If you could just quickly touch upon that, and also ClearTrip. How will this partnership help ClearTrip as well?
Sure. So, as you said, right, hospitality and travel is here to stay in India. It is one of the very few industries that is seeing tremendous amount of growth. So, by virtue of that, it's extremely critical for Flipkart and for ClearTrip by extension.
A little bit, if you could elaborate on how important travel is as a vertical, now that you've come on, what are the immediate strategic priorities for you when it comes to building ClearTrip also? Because, you have other very large players in the industry, some of them listed also. So, the competition is intense. And at a time where ClearTrip is also not profitable. So, what are your immediate strategic priorities to grow that?
Sure. So, while you rightly said the competition is intense, I think given the fact that the industry is growing, and industry is growing in various means and form, right? There is room for everybody to grow. I don't think it is one individual's game per se. The other interesting fact about travel is that people are wanting to move into immersive experiences. They are seeking travel to be their holdout destination, right? So how do we enable that for the user? How do we ensure that every time they are thinking of travel, they think of ClearTrip, they think of trip planning on ClearTrip, and how are we able to support it end to end is probably the next 2-3 years going to be on ClearTrip.
Let's now take a look at the top deals from the startup world this week. A total of 11 startups raised around $68 million as per Venture Intelligence. Some of the notable deals include HR tech company Darwinbox that raised $40 million from Ontario Teachers Pension Plan, and consumer durables brand Lifelong Online secured $13 million. That's not all. Elder care platform Age Care Labs too landed an investment worth $6 million, while kitchen appliances startup Beyond Appliances bagged $4 million from Fireside Ventures, and Y Capital, robotics arms maker Armatrix Automation secured $2.1 million. So far this year, over 500 startups have raised around $5.2 billion.
And with that, it is a wrap on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching.